Hello everyone, welcome to the ichimokujcharts.com hourly analysis for the SP 500 for Tuesday, October the 5th, 2010. Well, a nice rally today, and we can see that for the whole sessions trading, the market was in an uptrend. We have a series of candles making higher highs and higher lows, so a very, very nice bullish day today. Just one worrying factor with this market as it kept trading to the upside was that the bodies of the candles kept reducing and reducing as the trend developed and matured. So in the first hour of trading we had this very, very bullish candle which took out the resistance at the 1150 region. The second candle was bullish again, tested the area roughly around 1157 and failed to close up above there. Still another bullish candle with a fairly large green body, but quite a bit smaller than the previous. And as each hour continued on its way to the upside, the size of the bodies of the candles became smaller and smaller, although all of them except the candle in the last hour were green. So at least throughout the trading day, the buyers were making net bullish progress. Now the trouble is, the reason why it's not as bullish as we'd like to see is that the buyers have continually made less bullish progress than they had made on the previous candle, so that could be significant for this market. Now with the final hour of trading we have a red body candle, and that means that the sellers made some net bearish progress rather than the bulls making progress. Now, even though that happened, the market failed to change the trend. So we had the final candle still making a higher high and a higher low. Although the bears did close the market in control for the final hour, they did close the market down towards the low. Now, this is similar to a shooting star type candle, and we can see we have this, it's not quite a shooting star, but similar. We can see that we have this longish shadow on the top, and that represents downside price rejection sellers coming in. So in that final hour, as the market attempted to trade up to around this 1163 region, the sellers came back in. So there is some potential for a change of trend. Now, considering how bullish the market had been throughout the day, then there is an opportunity for the market to take a bit of a breather. So the low of the current candle in the opening hour of trading becomes very important for a potential lower high and a lower low, and potential for retracement back down to the resistance that was offered around 1157 from this swing high from where this market was rejected strongly from. Down below there we have the 1150 area as potential support, and the area around the top of the cloud and into the cloud will offer potentially very strong support. Down below the cloud we had a window open up, and quite a large size window, so if the market does break out to the downside below the cloud, there is very strong support down there around the window. In overall Ichimoku charts terms, the market is trading up above the cloud, so we do have an overall positive bias, and trading above the Kijun-sen and Tenkan-sen, so the market is bullish in the medium term and fast term timeframes. Market is looking a little bit overextended, trading a fair way away from all of these Ichimoku indicators, so there may be potential for a retracement, but we don't have any good evidence of that at the moment. Only the short-term dynamics in the final hour. That could be some profit taking in that final hour. So that's another reason why the low of the current candle becomes important if there is going to be a lower high and a lower low set up in that first hour of trading. So obviously that's an area that we should be watching, and certainly the area around the high, around 1163, is an area that we should be watching. The next level of resistance for this market is up around 1173. So if we do continue with this bullishness, then the market has potential to gain another 10 points over the next week or so.